What's up, everybody? Welcome on into the stream. Today we're talking about some very interesting stocks and ETF corresponding products that you might be looking at to potentially add to your portfolio or to trade with. I'm going to go ahead and I'm going to get this streamed to my audience as well. But we're going to start out here with the number one stock of the year. This one's pretty obvious. It is NVDA, and we're going to kind of explain why we're talking about NVIDIA here. And we're going to talk about a product which has taken NVIDIA and elevated its gains even further. So let's go ahead and let's get that chart up on NVIDIA. If you want to kind of give the overview on what you've been looking at in regards to NVIDIA over the last few months, Austin.
Yeah, absolutely. So it's been on an absolute tear. I mean, has outpaced the general market by 100x. I mean, at this point, coming to a low of 118 back in August. In my opinion, that was the buy. It was an easy money play. We've traded as high as about 972, so just touching just below 1,000. I mean, clear price targets obviously were 600, 800. The round numbers always work in the market. But I think what the real value proposition here with NVIDIA and the way that they've scaled so efficiently is that they are the only player in town when you need these high performance GPUs. They have the brand recognition to continue to drive that even further. But I'd say most importantly are the existing business relationships they have that allow for like instant pace of sale. I mean, I know that it's rumor, so full disclosure, absolute rumor, but there have been conversations going on. I know I've seen it around Twitter. I've seen it on other socials that, Meta is in the market for a $10 billion plus purchase. And who do they go to? They go to NVIDIA. And then you look at, alternative runners that, in my opinion, don't deserve the run they've had. SMCI, case in point. It's sympathy to NVIDIA. And I think the focus here and what I really like about what we're going to talk about is finding these leveraged ETF products that make it easy to gain leverage on these high performing names without having to take the risk of buying these kind of secondary and tertiary names that I think carry dramatically more risk. So outlook overall, I mean, we're still bullish. Again, for anybody's simple indicators or just understands technical analysis, this run is unprecedented. But I think that if we're holding over $800 a share on NVIDIA, we're maintaining pretty good pace. And in a shorter time frame view, you can see that the hourly chart is consolidating here. You just want to see buyers and sellers passing back and forth off the lows 853 and then pretty much off the highs of 900. So if we continue to consolidate here, I think NVIDIA is on pace to continue seeing upward growth over the next 2 quarters at the very least, with earnings over 2 quarters from now expected to be pretty favorable. Should they beat, I think that's going to be an explosive move for NVIDIA to the upside towards the end of the year.
Yeah, I like the rundown there. Also, shout out to X. Went to go ahead and share this stream through my page, and it gave me the old, this page is down. However, I went ahead and I quote tweeted the one from your page. So if you're joining in from the Wolf page, good to have you on here with us at the moment. I like the analysis there on NVIDIA. NVIDIA just had their conference the other day, and Jensen, he knows what he's got in his hands, right? And he's looking at this. And I think ultimately it's someone made a great point on a space that I was on the other day. They said, this is not going to go on forever. People are ultimately going to catch up. But NVIDIA right now is in such a command position that they can literally sell these chips for whatever they want, and they will sell out. It is wild.
It's their market, and they've also very efficiently scaled all of their cloud infrastructure business. So it's like, I think to me that was kind of like the nail in the coffin for everyone else, because if you can scale in that fashion, everyone knows like cloud-based infrastructure, that's your next 20 years of big business explosive growth. It's probably not going to be your Apples or even Facebooks or any of these other names that you've see a lot of appreciation over the last 2-3 years. It's going to be the cloud-based growth companies that have the opportunity to be both infrastructure and product, which NVIDIA is and has and always will be. It's megacorp, monopoly, whatever you want to call it. I mean, at this point, it's a little out of control, but it's a free market, so it's what it is.
Agreed. So let's take a look at another product here, which is really capitalized off of the success that NVIDIA has seen. And this is NVDL. So this is from Granite Shares. And for those that are unfamiliar with Granite Shares, company that I've been doing some great work with, we had their CEO, William Rind, on a space on Monday for an interview. They've been around for a good few years at this point. They have billions and billions of dollars in AUM, and their fastest growing product by an AUM metric, as well as also just general stock growth, has definitely been NVDL. Here's how crazy this is. 2 weeks ago, they put out a press notice stating NVDL has surpassed $1 billion in AUM, which is no small mark for any ETF, passing $1 billion in AUM. I went and I looked at it yesterday. Well, guess who passed $2 billion of AUM? NVDL. About $1 billion in AUM came in 2 to 3 weeks. Just absolutely crazy. So NVDL is straight up double leveraged NVIDIA, and you can see how that's just powered the heck out of this thing. It is up over 175% year to date and over 476% in the past year. And since launch, which by the way, this only launched December of 2022, it's up 832%. That's not a very long time period. That's about 1 year and 4 months that it has went up over 800%. And that's, I think, shown why there's so much popularity for this, right? For fund managers, especially those that are trying to catch up because they're behind the 8 ball, they realize that they've had to buy NVIDIA, right? You can't just be sitting there waiting and watching all the other funds participate and outperform. But now I think some of them are catching on to the fact that if they're going to really catch up, they have to get into some type of leverage product, but they don't necessarily want to go and buy calls on NVIDIA. They don't want to deal with potential quick downside. So they're trying to say, oh, how can I do this through shares, but how can I still leverage up a little bit? And that's where this has come into play. It's got a 1.57% expense ratio, but the gains that it's had, I think, have shown people the value within it. And then the other cool part with a product like this is it makes for actually a great trading product because NVIDIA is so volatile, often moving 4, 5, 6% a day, that this product will have 10% moves regularly, allowing people to trade it to the upside, the downside, and so on and so forth. It has great momentum. It has great liquidity. I see a lot of benefits for those that are trying to trade NVIDIA. And here's the cool thing. You can actually, if you are trying to get in the option side, you can trade options on this, right? There's a whole option chain as well. So if you are like trading options on NVIDIA, you can go and take a look at the options on this one as well. Right now,
You
yes.
can't afford the options chain on NVIDIA due to the share price.
Yeah, true. Exactly. Right now, if you're looking on the options chain and you're trying to just go one out of the money on NVDL, that's going to run you about $520 per contract. And then if you're looking at NVDA and you're trying to go one strike out of the money, that's going to run you about $20.8 per contract. So it is about 4 times cheaper to get one of those contracts. The IV is a little bit higher on the leverage product, so that's something to continue to be aware of. But yeah, it seems like there's a lot of purposes and reasons why somebody might be interested in this. And then what I was kind of getting at there too was if you're really a fan of the downside and you think NVIDIA is going to come down, you can trade this both ways, right? And you can play it with the puts to the downside. So there's kind of my high-level thoughts on it. Curious to hear yours, Austin.
I mean, I like the options angle. I think is actually really interesting because, to be honest, I hadn't really thought of it before then. But if your goal was to look at the options chain, so like if your goal, for example, was to trade NVIDIA options, I mean, if you want to be a real options trader and you don't want to lose your money in 5 minutes, you want to at least go a couple months out on the strike. I mean, unless you are like skilled day trading for 5-10 years and you really know what you're doing. I mean, to your point, going just a few dollars out of the money here, you're talking $12,000 a contract, which is just not sustainable for most people. It's not. It's just out of the price range of many more. I just don't think the buying opportunity is not there. Whereas if we look on roughly the same expiration, I think we went about 3 months out. You're talking a significant reduction in cost. It's 1/10 to go like $1 out. It's basically 1/10 of the price. Now again, I've not traded ETF. I'm not traded options on this specific ETF, but implied volatility is boomed right now. So that's keep that in mind, guys. Delta's already moved, so you're not going to get the same appreciation you would, but still worth it because at the end of the day, like if you're truly bullish on NVIDIA, right, and you really think the move's coming and like say it's not sustainable to buy 50 shares, 60 shares, whatever, because of the size of your account, this is, I think, an opportunity to capitalize on stuff like that by taking advantage of the lower priced options chain, which, by the way, is also leveraged, in which you'll get that same volatility that you'd expect with NVIDIA, you can get here. So I think that was a good point to note. You have fewer options in terms of both expiration, your strike and your expiration. But even if you were to say, want to take just a leap of faith, go a little bit further out of the money and say, you know what, I think this is coming back up to $50. This is the opportunity. NVIDIA is going to be bullish again. for $700, you can take a call that can potentially make you a significant amount of money, versus you go to NVIDIA, you're going to have to spend still $5,000-$6,000 on that one contract, which just isn't sustainable for most people. So I think just the access that you get by trading these other products that are priced on a per share basis in a much different way in terms of, like, obviously just basic price, it's significantly cheaper. And I think that's an interesting angle you brought up that I honestly hadn't even thought of, but it makes sense.
Yeah. Now, obviously, NVIDIA is really run up, potentially overextended. Hard to fully tell right now. If you're taking a look at just the straight up stock and you're going into, Wall Street's projections and items like that, a lot of them are, well, funny enough. So the quant model that I'm looking at rates it as a hold. And that's because it still has, good growth and profitability, momentum, and revisions, just rough valuation. Wall Street actually looks like they still have NVIDIA ranked as a strong buy right now. I actually just went in and I looked at the ratings here, and yeah, they've got it at a 4.62 out of 5 as a strong buy. That's off of 56 analysts, with 40 of them rating it a strong buy in the last 90 days, and 11 of them rating it a buy, 5 of them rating it a hold, 0 sell, 0 strong sell. So Wall Street still seems bullish on this, and seeing potential upside. So if you're looking at maybe this is where something like this comes into play for me, right? And it's kind of almost similar to crypto, where you come in with some of these things and they're booming and they're running. You go, I want some of that upside, but hey, I'm also worried I'm getting in towards the top area. So I'm going to play with smaller size, right? That's what happens. People say, I'm going to come in with smaller size. And you come in and imagine the situation in cryptos. I've had this happen all the time. You come in with like $500. It goes up 100%. You're like, wow, I went up 100%, but it's $500. Versus if you have something leveraged, and this is where I see friends play with this, they'll put $40, right, on a 4x leverage or something like that. And now as that piece starts to move, well, their risk, yes, is a little bit higher on it, but also their position size is a lot smaller. So NVDL, I think, does allow some people potentially to play with a little bit smaller size that are coming in. But at the end of the day, listen, it's a 2x leverage product. It's definitely more fit for traders at this point. And we've run through the option chain really nicely. Let's switch gears a little bit though, because there's another stock that is not performing well this year and is a very popular one as well. And that's Tesla. Tesla's down about 35% year to date, I believe, right around there off the top of my head. And so it's something that, is drawing attention from retail, but people are scared, right? Like, where am I going to buy something like this? And Granite Shares has actually made multiple Tesla products just due to its popularity that allow people to slightly scale up or even double their leverage, like we talked about in the other one. So I hope people who have never been familiar with these before are learning something, because it was cool when people put these on my radar and I started learning about them. The way that I see this working is, if you're someone that believes in Tesla and you believe that Tesla is going to have the Tesla turnaround at some point this year, and you're starting to build up your position, well, this could be a very nice vehicle for you to also build that position in, right? As you look at it and say, all right, well, I believe Tesla's going to bounce back, and I don't want to play it with options. I just want my commons, but I'm a believer, right? And I want to be able to get a little bit of a better gain than just Tesla itself. So why not look at TSL, right? Just TSL. That one's got a leverage, or TSLR, which is double leverage. You got multiple options here to say, hey, when I get into this and I think it's going to move to the upside, I just want a little bit extra on that upside. So to me, it makes even more sense for something like Tesla, where NVIDIA potentially is extended. And obviously, most of us are not just shorting outright shares on these things. So let's say we're talking about long only here. This is where this is kind of like a beautiful product to potentially have that bounce back on a long only area. And I'm bullish on Tesla. I've been buying Tesla, but the more I learn about products like TSLR, the more I like having them in my portfolio.
Yeah, I'd agree. And I think for all the Tesla fanatics out there, fear not. I think have faith. I mean, just being honest, just from my perspective, again, I'm not an advisor. I'm not a professional, and this is not advice, but I'm on the same vein as my friend Wolf here. I have been slowly and quietly buying, to switch back to the Tesla chart here, which gives credence. We'll flip back and forth because, I mean, again, the potential for leverage and the access offered by the I guess the lower share price that's following the same stock is like it's unparalleled, because again, Not everybody can buy 15, 20 shares of Tesla. You can buy 10, 15, 20 shares of a product priced at 10, 15 bucks a share. But looking at Tesla, very interesting range here, 170.90 or 160.98, excuse me. That was my strong buy. It just hit the other day. My orders were filled around an average of 162 and change. Core position overall, my average on Tesla, I think it's about 80, 90 bucks. Plan to hold it for quite a while. It's a software company. You guys, understand the future here. And then to shift, right? Again, so we're talking about this Tesla chart. This is the Tesla chart. That TSLR follows, right, at 2x leverage, but it's also priced so that if you have a smaller account, you can't throw $10,000 at stock, you could still get that capital appreciation without having all of the capital requirement. So again, 160 to 182, look at these lines. It's just different rungs on the ladder. Second, we start climbing and keep climbing, there's dramatic potential for upside here. In my opinion, to about 266, these thicker lines, that's the daddy range, if you will. Once we break back up here, Daddy Elon will start shaking the tree, and you know what he's going to do. He's going to get on socials. Media's going to come out. They'll have some great numbers, whatever happens. And then, boom, before we know it, we're trading back up to 266. So what does that mean if I buy one of these leveraged ETF products? Well, as Tesla has fallen from – let's flip back. So Tesla's fallen from 297 to about 160, right? In that same time, you've got 33 on the TSLR, Granite Shares 2x leverage exchange ETF. You've got 33 to roughly $10, right? So it's down to about a third of its value, right? So again, Warren Buffett said it best: you buy, you buy them when they're cheap, you sell them when they're not. It's a simple thesis here. You buy good companies, you can understand when they are not valued appropriately. And I would argue that right now the market isn't valuing Tesla appropriately because, remember, the market and the economy are disjointed. They don't play together all the time. There are great companies that have great products, great revenues, wonderful marketing, great partnerships, explosive growth, but they trade as if they were a soon-to-be delisted stock on the OTC. Why? Because investors simply don't know what they're doing. They're not informed, or they're just not marketing their company well enough so they can actually build an investor base of people that support the mission. Tesla has no problem with that. But they do have a problem in that there are, I would say, the Tesla bears are a vigorous bunch. And they love sharing their gospel with the world. But how long can they do that before the market finally says, hey, enough of this? So what does that mean if I want action on Tesla, but I can't buy 20 shares? Well, here's a $12 product, $12 ETF, share of this ETF right here, TSLR, that's trading at about 12 bucks. Again, as Tesla fell from 300 to 150, so as Tesla lost half its value, this one lost roughly 2/3 of its value. So I would argue more attrition than there should have been. This should be following in line with Tesla, right? But again, they trade how they trade. No one can control that. So in theory, you've got some, I would say, undervalued here because you should have just seen a 50% loss in value. It should be from 30 to 15. So, say the buy is here, right here at this base, 1127. Buy, go to 15. You've taken basically a 40% return because Tesla's ripping, right? Whereas you're not going to see that same 40% return on Tesla because of the share price. So I think there are arbitrage opportunities too with products like this where you can see outsized gains because of the fact that it's leveraged 2x and a different product when you really just wanted Tesla gains, whereas you give up Tesla 30% to own the stock, you take Granite Shares, TSLR, 50% on the same trade. That's what interests me. I think that arbitrage opportunity is cool. It's really cool.
Yeah, I like that a lot. And I think you made some good points as well. I think Tesla's getting a little bit dinged in regards to their fundamentals just because of their gross profit margin, right? Gross profit margin, leverage free cash flow margin, and asset turnover ratio are really the areas where Tesla is not great necessarily in regards to their sector necessarily, their sector median.
Mm-hmm.
Now it's hard to exactly say what their proper comps are because it seems like all their comps are going out of business. But yeah, like gross profit margins at 18.25%, and so they really get dinged off there. But people need to look at some of the other areas, right? Like their net income margin, which is still fantastic. Their EBITDA margins, which are still pretty great. They've got really good capex to sales, really good net income per employee. A lot of these items, which I think still stack up in its favor. In addition to that, there's still really nice growth, right? Like revenue growth is not bad. It's what, like 18% and 19% year over year. Along those lines, their forward-looking revenue growth is pretty good. So in a lot of these areas, there's still certainly value to be had. Now, unfortunately, in traditional valuation metrics like a PE and EV to EBITDA and stuff like that, I mean, they're going to fail, right? And that's because they're looking at a sector which is relatively low in those areas. For example, most of its comps, have around a 14 PE trailing 12 months, and Tesla's around 55.5, right? And so it's not coming super close to those areas, but I still think that they have good growth and profitability metrics. As long as you're not, paying, putting all your eggs in the gross profit margin basket, which yes, it's not great compared to the sector, but when they're still coming out with a really nice net income margin in other areas, I think that those things can substitute. So for me, like I said, I've continued to buy. And so for me, having something like TSLR or even just the TSL, if you want like a little bit less, just want 1.25, does make sense to me. And so I think you're hitting the nail on the head with that arbitrage opportunity.
Yeah. And I mean, too, when you talk valuation, I mean, to sit them side by side with a Ford is a difficult comparison because they have these other verticals that Ford is not going to have. I mean, in reality, what do automakers do? They don't sell the cars to make money, guys. They sell the cars to get maintenance money. They want to sell parts at wholesale. They want to service fleet vehicles. Like that's where these automakers are really making their money. I mean, as products are built to fail, I mean, that's our reality. It's sad. Material quality has gone down. Labor quality has gone down. It just is what it is. But auto manufacturers in the United States, much like Ford, like they build so that they can maintain. That's where they're really going to make their money, is in your maintenance. So they don't really care to get the car off the lot and make just a sliver of money. And I highly doubt they're making a sliver. But you look at what Tesla's done and why it's so impressive is because it's so hard to break into that market because the margins are in the maintenance. So to build a car company at this stage in this day and age, I think is one of the most shocking feats that they have accomplished and getting as much of the market as they have. But then you sit down and you look at the verticals, any other EV manufacturer. I mean, look at the deal they just inked with the charging station stuff. Like, boom, right there. New revenue stream, new vertical that honestly I don't think there are going to be many other players take advantage of. Let's just say hypothetically, all these other automakers that have to adopt EV by 2030, whatever it is, say, you know what, we don't want to go through the process of software development, blah, blah, blah. Let's just license yours. Dude, now all of a sudden they're the top software company for any and all automobiles that touch the road. Like, I think the opportunity here is unprecedented, scary a little bit almost. And that doesn't even include, I don't know much about their solar business. I don't know anything about it, to be honest, but it's just having these other segments. I would assume that they're not doing it unless it's profitable and worth doing. I don't really agree with solar in general, but anyway, it's not the point. Is that the opportunities that sit in front of them are huge, and so that when you look at these leverage products, right? So I just breeze through the options chain real quick. Unfortunately, I don't see any open interest on the TSLR side. I did on the NVDL, but not TSLR. So I don't know how the options trades would go there. Because there's no open interest, at least reflected from what I'm looking at now. But those options are priced at $200-300. I mean, with significant upside. Some of the further out of the money options, like the $20 calls, for example, with almost half a year of expiration, you got a delta of 0.01, which means is that delta escalates as the price moves. That contract gains significant value very quickly. So I think there's definitely, especially with this one, more arbitrage opportunity, even more than on the NVIDIA side, I think. But also because you look at the Tesla chart, you've got two very different pictures, right? We talked about NVIDIA, boom, upside. And then you got Tesla, boom, downside. So it's just a matter of taking advantage of these products where they are. So like in my first look, what I would do, I'm a trader, I sit down and look at this. I go long TSLR, I go short NVDL. Boom, done. Right? I mean, if you're just playing the averages, now I'm not saying that's what I'm going to do, but you get the point. That I think on the TSLR, especially, like the upside here is it's pretty impressive. Like I don't know, I might have sold myself on this now that I'm thinking about it, because if I can, if I can put in a much bigger position and see 100% capital appreciation, even though Tesla only went up 50%, that's a good deal for me. And that's a good deal for any investor, especially if I do expect more upside on Tesla. That is very interesting to me. So this one is this is a watch list ad for me, because honestly, I didn't really look at it before this. It's interesting. Significant inflows too lately. Look at that buying. And I imagine it's going to fall in line with Tesla, but I would argue that reversal's imminent here over 12. I mean, I think the upside's coming, climb to 14, then 19. I mean, just from where we are right now, it's 100% to the upside. And I would argue that Tesla's probably only going to move 40, 50% in that same time period. So, I mean, guys, think about this and really pay attention to these arbitrage opportunities. Like, your whole goal in managing your own money is to take advantage of moves like this and ensure that you outpace the simple, index investor, which I would argue that era is dead, because what happened from 09 to 2019 is not going to happen again. It's just not. You have to be more of a stock picker. And I don't just mean stocks. I mean, even ETF. You just need to make better picks, more independent picks. I mean, personally, what I've done, again, my strategy, don't take it for financial advice because it is not. I have concentrated basically my money into fewer names, bigger positions with higher conviction. And for those of you that followed the stream that did the other day, I talked about that in depth. Like, I think the high conviction picks are what it's going to take this year to move the needle. And like, this is one I like, and I think is good. I'm glad you brought it up because this one's very interesting. I would argue that I would suggest, I guess, this is a watch list ad for me, and I would do the same. Because watch how Tesla moves. Tesla moves 10%. Go back and look and see how much this moves. I would argue that you're probably going to see a greater appreciation here than you're going to see on Tesla. So then you can make your decision. Where's my money best kept? I believe in Tesla. I want to make money from Tesla's growth. Where can I best achieve that? I think it's probably going to be here.
Yeah, I think that you're definitely correct on that. And also what I just point out is the reason that there's so much less open interest on those is because of the AUM of each fund. And NVIDIA's just kind of stolen the show and has a 2 billion AUM, and this one has 8.5 million.
Oh, okay.
So there's definitely a little bit of a difference between those two. TSL is about half that at 4 million. So there is an option chain on these, which is great. But yeah, that NVDL one is going to be a lot more liquid.
Okay, because somebody watching brought up this TSLT, and I'd never looked at it before. I wonder do you know what the market cap is here? 252 million.
Yep.
Just taking a look. This is the only other competitor that I've seen, at least on the 2x leverage. Never heard of it though. It also looks like you don't 28 to 10. You don't get the same level of arbitrage, but to each their own.
Yeah.
I want to maximize. Yeah, you're getting way more here. 33 to 11 versus 28 to like 10.5, 12. Yeah, I'm taking this any day. But yeah, so you ready to talk some gold, guy?
Yeah. Let's wrap this up with some gold talk.
Let's talk gold. Who would have thought, huh?
All-time highs, baby.
Who would have thought? Let's first just take a peek at where is gold in general. Unreal. Let's go to the monthly just to get a clear understanding of what has transpired here. Looks like the Apple chart, to be honest with you. It's still curling. Look at that. It's just still curling, just trying, cutting. So like when you see those moves to the upside and they look rounded they look rounded as if they're heading down, no good. Never good. In most 99% of the time, unless obviously a huge macro event, PR news, whatever. But when you see these tight little curls up, it's like a wave, man. It's just ready to spill over and keep going. But yeah, I mean, if you look back, we're talking July of 1972, having your money in gold was a pretty damn good idea. I wonder how much that's outpaced inflation. What was money worth in 1972?
That's a good question. What was $1 worth in 1972?
Let's see, I got it right here.
Says it was about 6x. Oh, wait. Yeah, $1 in 1972 was equal to $6 in 2018. Or the opposite way. $1 in 2018 was equal to $6.
That makes me optimistic for the future. Yeah, there's an argument to be made, which we don't get into it, but currency debasement versus inflation, like the underlying value of the currency when detached from gold would not follow the prosperous pathway of gold, unfortunately. Had we remained tethered to gold, our money would not be worth as little as it is now.
So this says right now, cumulative price change since 1972 to today is 642%.
So gold has gone from 70 to 2,500, right? So let's just see if your money's in gold versus it's in cash. Let's see what the difference is here. God, my
That's a
internet.
35x.
Oh man. So you beat holding cash in the mattress by so like 75, 2,500. Yep. Yeah. So your money, instead of the seven, what was it? Instead of $1 to basically seven, right? $1 in 1972 is worth $1. Right now, that same value carried over the amount of years it's been, 50 something years, you basically need $7 to have the same purchasing power as $1 had back then. Versus had you just sat and held gold, your $75 then would have $2,500 purchasing power now. Or sorry, your $75 then would be worth $2,500 now without losing any of that purchasing power. You actually would have seen a 32x. Unbelievable.
Yeah.
Damn. So all those guys holding all those gold bars that everybody thought was crazy, man. They made out. I mean, obviously they sell them.
Well,
but yeah,
let's tell them what we're kind of talking about here is bar. So with all that being said, if you are looking for exposure to gold, we're taking a look at bar. Bar is the gold trust from Granite Shares. Straight up tracks the spot gold price, less trust expenses and liabilities. The cool piece here is that they actually use physically held gold. So that's stored in vaults in London. And this has been a really popular one. As you can see, the holding in it, there's a single holding. It is physical gold bullion. It has 978 million in AUM. So this is a large boy again, almost $1 billion in AUM. It is already up 4.46% year to date. It is up over 8.5% in the past year. It is up over 60% since they launched it in the market. It does pretty good volume, average volume of 687K a day.
Yeah. Yeah, so I would imagine that a lot of that, yeah. I mean, it makes sense. It's just a lot easier to buy into a product like this. It's going to be measured against. I mean, I love the idea of being backed by actual gold. I mean, that's good stuff. That's really good stuff. It's backed by actual physical gold. I mean, that was a hell of a run. So 2019, 2018, gold was not doing well. 1193. So you basically doubled your money. I mean, for off the lows at the very least.
Yeah, definitely. I mean, gold, I think, is one of those things where it's one of those more secure staples that people will throw into their portfolios, especially at times like this, right? Stock market's kind of at all-time highs.
Yep.
Not exactly sure if we're going to get that pullback, looking for a little bit of stability, trying to spread your money out. In fact, I mean, one of the investors that I follow on a regular basis, Jaguar Analytics, who comes on my spaces a lot, we just did a space before this, and he talked about how he's been rotating more money into gold. It's a top 3 position for him right now in one of his portfolios alongside silver. He's just saying, hey, I'm looking at it, and he's like, I like energy, I like gold, I like silver. He's like, that's what I like when the market's getting a little frothy up here at the all-time highs, and I can't fault people for that.
No.
It's been a popular trade for a long time.
Yeah, I mean, like the key thing here, guys, is like the real trade is there when you're not seeing it everywhere. When you're seeing it, the NVIDIAs of the world, right? When you're seeing them everywhere, there's that old adage that they used to say that when your shoe shiner asks you about a stock, it's time to sell, right? And the same holds true here, because when you see your like uncle on social media being like, oh, NVIDIA, like, how do I buy that? That looks good. That's when you should be like, oh, man, it's time for me to collect my money and run, or at least hedge the position, because in most cases, there's a reason that's happening. I mean, just look at the way things are as humans. I mean, we follow trends, we get sucked into hype, and a lot of things work really well for a while and then they don't. And you need to be mindful of that, because everything in investing for me, the vision that guides me is like, where can I put my money now so that it appreciates the most and doesn't get outpaced by inflation? So it's not a matter of whether NVIDIA is a great company, because it is. They're extremely well positioned. What matters is how much more upside is there on the stock right now.
Yep.
So again, economy, stock market, they are not the same thing. The business, the stock, not the same thing, as unfortunate as that is. Much like we untethered gold from the dollar, in my head, after COVID, you detach the stock from the company in some cases, right? That even if NVIDIA continues to grow, they're going to need outstanding numbers, outstanding, unfathomable numbers to see the same kind of growth we've already experienced. Doesn't mean there'll be no growth. But if I have a company over here that's positioned for 100% upside the next year, and NVIDIA, which is positioned for 25% upside, the choice is yours. Which one am I going to take? I want the 100%. That's what I crave.
Yeah. Hopefully this is super helpful. We got to wrap up here. But listen, I mean, people have been making the case for gold for a long time, and they're going to be for a long time. It's not going anywhere. If you're looking for an easy way to get exposure to physical gold, this is likely it. Hopefully that was helpful. And by the way, that's just a few of the ETFs that they offer. Granite Shares is consistently launching new products. They've got a full suite. You can just type in graniteshares.com. Go ahead and take a look. But these are some of the most popular ones or some of the most interesting ones to us. So we wanted to go ahead and cover them today. Any other comments for you, Austin?
No, I mean, you covered it, man. I mean, I know they're releasing the Amazon longs, the Microsoft longs. So just keep an eye on what they're doing because, again, if you can capture these arbitrage opportunities on companies you do want exposure to but have just gotten out of control in terms of share price, I think this is where, personally, I think it's worth looking.
Perfect. Thanks so much to everyone that tuned in. We hope you enjoyed. We'll be back again soon with another one.
All right. Thanks, guys. Have a good one. Stay blessed now.